What if you could profit on the best stocks that are dominating their markets and pay half the price? Yeah, a 50% off sale. I love a good sale. I've made over 100% returns regularly using this strategy, and I'm going to show you in this video exactly how to do it step by step. Be sure and watch to the end, and I'll cover a special tip that will show you how to bring in even more profits. In this video, we will cover what are LEAPS options, why is it beneficial to buy LEAPS options, and how do we buy LEAPS options, showing a real example on the option trading platform. Hey guys, Darren here. We've got a great video for you here today. But first, do me a favor, please hit that like button so we can get this video out to more people. In today's video, we're going to be covering the LEAPS option strategy, and we will have a complete tutorial showing how to profit while using half the money or half the cost that it would take to buy the stock outright. I think it's important that we understand all kinds of different strategies that we can use to profit in any market while doing it safely. The rich are doing this, and we should understand it too. I promise we're going to dig into many detailed tips and tricks in this video and future videos. So if you haven't subscribed already, please do that now, right after you hit that like button. Be sure to download the free options workshop in the link below. It talks about the two main benefits of trading options over buying stocks. Disclaimer, I'm not a financial planner and I'm not recommending trades. Please do your own research, and if you're new or learning options, I recommend you start small. What are LEAPS options? Long-term equity anticipation securities, otherwise known as LEAPS, are publicly traded option contracts with expiration dates that are longer than 1 year and typically 2 to 3 years from issue. So Darren, what are short-term options called? Options. Why is it beneficial to buy LEAPS options? One LEAPS option contract allows you to control 100 shares of stock for around 1/2 the cost of buying the stock outright. So since you're paying less, your ROI or return on investment will be higher. In other words, you are leveraging returns. You are also reducing risk. The max amount that you can lose if the stock goes to zero is the amount that you pay for the option. So close to 1/2 when compared to losing everything if you bought the stock outright and the company went bankrupt. Then you lose everything. How do we buy LEAPS options? The best way to show you this is to just jump in and show you. All right, we're going to take a look at how to place a LEAPS option trade on the option trading platform. You can do this with any brokerage on any platform. We are going to use the Tastytrade platform. Tastytrade is one of the best brokerages for trading options. It's the one that I've used for years, and they're the guys that developed the TOS, the Thinkorswim platform, and sold it to TD Ameritrade, which is now used by Schwab and TD still. Tastytrade is even better. Right now you can get cash back when you open an account. I'll put a link down below, and if you fund with at least $2,000, the channel does get a small fee, which really helps us out, and really appreciate it. You kind of need a couple thousand anyway in order to place a few different trades. All right, we're going to take a look at a stock, Palantir. First off, let's take a quick look at why we're going to look at buying a LEAPS option in Palantir. When we look at the chart on TradingView, Palantir was up to around 35 prior to the pandemic at the beginning of 2021. Because it's a high growth stock, it really moved down with the onset of the higher interest rates following COVID. There was just a recent big move up since everyone realizes that Palantir is the dominant leader in software platforms that analyze data. So you may want to wait a minute for a pullback if you're considering Palantir before putting this trade on. We know data analytics and AI is going to continue to grow at a rapid pace, and Palantir is the player. It's both strongest in commercial and the government defense markets as well. So we punch in the ticker PLTR in the upper left on the trade page and open up the option chains. Now there are regular options and weekly options. The regular options typically have a little higher volume. Since we are going way out, we click on the last one and open the January 17th, 2025 chain that is 548 days to expiration. We click on the ask to buy the 10 strike call option for $10, which is really $1,000 since one option contract controls 100 shares of stock. Now the current stock price is $18, so it would cost $18 times 100 shares or $1,800 to buy 100 shares of Palantir stock. We are controlling the same 100 shares for almost half the cost at $1,000 since one $10 option contract controls the 100 shares. But stay tuned, I'm going to show you how to get the cost down even further. We switch to curve mode in the upper left and see that our max profit is infinity. Yes, so just like buying 100 shares of stock outright, we continue to rake in the profits as the stock increases in price over time. If the stock gets back to its previous high of $35, then our profit will look something like this. We would sell our $10 strike leaps contract for $35. Our profit would be $35 minus $10 or $20. However, remember we paid $10, so we need to subtract that as well. So it would be $35 minus the $10 strike price minus the $10 cost, or $15, which is $1,500 since there's 100 shares. An important note, you don't need to hold the option for a year or more until expiration. That option contract will increase in price as the stock price moves up, so you can sell the leaps option and bank the profits at any time. You can actually see the $1,500 profit right here on the chart on the tastytrade platform. Isn't that great? Remember to use the link below to open your tastytrade account and fund with at least $2,000. Now I mentioned there was a special tip that would bring in even more profits. Here it is. We can also sell a call against our leaps option as well. Yeah, just like a covered call strategy. However, because we are using a leaps option contract, it's called a poor man's covered call. So we go back to the option chains and open up the August 18th regular option chain that is 30 days to expiration. We click on the bid to sell the 20 call option. By doing this, we collect another $110. So you can see where the total cost is now $890 and not $1,000. Switching to curve mode, you can see that it does cap our profit. If the stock price that is currently at $18 shoots up above the $20 strike price within the next 30 days, then we could be assigned short stock. That just means that we have to sell 100 shares of stock. However, our leaps option has increased in price much more, so we can sell it easily to cover the short position and be out for a profit. Normally, stocks move up and down over time and don't just shoot straight up. The beauty of the poor man's covered call is that we can then just roll out our short call option month after month and collect additional premium while our leaps option moves up in value. It also reduces risk, since if the stock does not move up or stays where it's at, then we keep that premium received from selling the call every month. So in this case, it would be $110. Doing this every month more than covers the cost that we would pay for the leaps option up front. All right, guys, if you're a beginner and this sounded kind of confusing, don't worry. It did for me as well at first. We'll continue to learn together and succeed together in future videos. I put a link down below for the free options workshop. Be sure and grab that. Remember to hit like and subscribe. And let me know in the comments below what you're trading, any questions that you have, and I will be sure and respond. Thanks for watching. Share the video with a friend and see you in the next one.